Welcome to Mobey Forum's webinar on SCA in m-commerce, led by Ron van Wezel and Roney Castro. First of all, I would like to thank all of the participants for joining us today. I would also like to thank the expert group for analyzing and finalizing the output. Before we dig deeper into the expert group and survey results, I would like to say a few words about Mobey Forum. Mobey Forum is a global industry association empowering banks and other financial institutions in leading the future of digital services by connecting industry thought leaders. Mobey Forum is a non-profit organization. Our around 70 members stretch across continents and represent banks and financial industries and companies. Mobey and its members stay ahead of the curve. We focus on the future in and between the quarterly 3-day member meetings. As a member, you meet industry friends in an open environment. You have access to expert brainpower. You are core asset in content creation, and you are the platform for recognizing and leading future challenges and trends. Our current expert group are focusing on questions around open banking, virtual currencies, banking disruption, and IoT. And my name is Maaike Frisk from Mobey Forum. Now, please, Ron and Roney, go ahead.
Yes, good afternoon, everyone, or good morning if you are in the United States. This is Ron van Wezel. I'm working for Aite Group. We are a research and advisory firm, and I'm going to do this presentation together with Roney Castro from UL. I'll do the first part of the presentation, and then I will hand over to Roney, but of course we will also jump in each other's sessions. So agenda for today, I want to talk about the approach that we took. So this is a co-production between Aite Group and Mobey Forum. Explain you what we did and how we did it, so our methodology. Then I'll cover balancing fraud and friction, so some highlights on the report together with Roney, and present you with some key takeaways. Next slide, please. So here you see the working group that produced the report that we made together. So co-chairs from Roney from UL, Jacob Hansen from Nordea, and myself from Aite Group. And you see a large number of members from the vendor and banking community. Of course, assisted by the Mobey Forum team. Next slide, please. So in terms of methodology, I think it was maybe the first time that we did it this way. So we have the Mobey Forum expert group, as it's called. So lots of expertise from around the world on payments and authentication. And it was Aite Group executed the research. So we have a specific team that runs this kind of research surveys, and we leverage that and then discuss the results with the Mobey Forum expert group to actually complete the research. So the base of the research was an online survey that we run between June and September 2017 with respondents from the merchant, banking, and vendor community around the world. We sent it to 3 target audiences. Of course, the context from Mobey Forum itself, so members and other names that were on the Mobey Forum list. Aite Group contacts, so our own Aite Group contact list was leveraged as well, and we reached out to a selected group of merchants because we thought for this research also important to get direct input from the merchant community. Between June and September, when we ran the survey, we received 76 complete responses, which goes against the number of emails that were sent out. Is actually pretty good result. So this seemed to be a topic, authentication in commerce, in m-commerce, that that people were really interested in, and were happy to fill out the questionnaire to get the report in return. Next slide, please. So we took a really focused approach. we started preparing for Edinburgh meeting in June. So this was actually the kickoff for the project, where we had the first face-to-face meeting, developed the online survey. Then we produced the online. We had the online survey in the market between June and August, beginning of September actually. And already in August, we were able to present the first results in the Mobey Forum meeting in Toronto. And then we started writing the report. So we were able to present the result of the report already in November 7 in Barcelona. So as we speak today on the webinar, also the report is going to be published by the Mobey Forum team on the website. You can look it up. If you're a member, you can actually download it and read it for yourself. Next slide, please. So now going to the content of the report. So this is about balancing fraud and friction. So you have the customer sits on the online journey, so it wants to order something, wants to buy something online, and they want to get through the checkout as quickly as possible. You know, all this as a from a personal experience. You have visited this website, you looked around, you found what you were seeking for, and then the checkout process is just basically considered a nuisance. So you want to have this as frictionless as possible and get it easy and get it done. Especially if you're sitting on your mobile phone. With this on a small screen, you're probably on the way, and before you actually leave the train, you want to have completed the deal. So that's one thing. On the other side, fraud is increasing. We'll come back to that later. And that means that the providers have to make sure that this experience is going to be safe as well for you, and that is secure for the bank, because eventually they're going to be liable for any fraud that's happening. And those two can clash. There can be pretty intrusive methods of committing fraud that leaves customers with the feeling that they don't want to continue the experience, and basically they leave their baskets unpaid. That's of course a big revenue decline for merchants. So this is the play that is going to be in the focus of the report, and we'll show you a little bit more about that later. Next slide, please. So a little bit about the respondents to the survey. So you see there's 80% of respondents came from the FI and vendor community. Unfortunately, we didn't get a very high response from merchants. So what you see here is reflecting how the supply side looks at m-commerce authentication. From the respondents, about 69% of FIs had a European focus, while for the vendor community, we had more a global audience. And it may also have to do with the specific member group of Mobey Forum that we were targeting, that we had from the FI side, more an audience within the European space. In terms of the roles of respondents, about half the respondents said that they work in a product role or in a marketing role. Next slide, please. So let's talk a bit about market trends. So market trends are from a merchant perspective. You see a rising fraud in what was called Cardnotpresent. So this really online payment fraud. As EMV is being rolled out around the globe at the point of sale terminal, it's very difficult for fraudsters to actually commit fraud there. So the fraud is shifting to the online world. That means that financial institutions and merchants really need to bolster their fraud authentication controls, or otherwise it's going to be exposed to rising fraud attacks. And that is an issue for merchants. Fraud actually rising about at the same growth as the e-commerce growth as a whole. It's not that fraud is, an issue that's cannot be controlled. There are sufficient fraud detection and analysis methods available to actually be able to control this fraud. And that's important for the next point, because there's a huge focus on the user experience. And that's because of people like Amazon and eBay providing this one-click checkout experience that if you are not able to offer that, then you're going to be in competitive disadvantage in terms of these giants. So that means that merchants, and of course their providers, PSPs and FIs, are really on a quest to remove this kind of friction from user experience. And especially, as I said before, it's very important for the m-commerce experience when on the smaller screens and the mobile first kind of approach that many merchants want to take. And they have to do this in an increasingly complex payment space. In the past, it was cards and it was perhaps PayPal, and that was it. Now you get so many local payment types that have to be supported, where you don't know this payment type is actually going to catch on. But on the other side, if you don't offer it, maybe you're going to lose customers. So merchants have to manage multiple payment types across different geographies and prevent fraud and protect their user experience across all those different payment methods. And if that's not enough, the regulator have, of course, also recognized that fraud is increasing. And they say, the markets where we're not able to control that by itself, so we want to impose some new requirements to force merchants and banks to get the more security for the consumer. And that means that regulations like PSD2, but there's other markets like India, Singapore, South Korea, where the same applies, that you will have the requirement to have a strong customer authentication, meaning you would have at least dual factor authentication is going to be required for payments. And that sets some new challenges. So how to protect this user experience when this kind of rules are being put in place. Roney, anything you want to add here so far?
No, not at this moment, Ron. Yeah.
All right, thanks, Roney. Then the next slide, please. So this kind of illustrates the point around card-not-present fraud. It's really rising around the globe. You see on the left side the fraud figures for Australia, UK, and Canada. Similar figures for the US on the right side. So also in the US, card-not-present fraud is increasing. And we see there the same as in the other markets that after the introduction of EMV and the conversion to EMV and the physical point of sale, that you see a rising CMP fraud in the US market, similar to the other markets that have gone to EMV before. Next slide, please. So just coming back to this conundrum, how to balance your fraud prevention against friction. And there you see the first results from our survey. On the left side, almost all respondents to the survey recognize the importance of strong customer authentication. And they mentioned this either critical, very important, or important for protecting the payment experience. Nearly half was actually voting for that this SCA is critical. At the same time, people said that reducing friction in the user experience is the most important criterion for merchants when they evaluate their payment management approach. And this has been confirmed by some recent research that Aite Group did. It's not been published yet, but I can share some insights when we spoke directly with 40 merchants around the world, that the user experience is central and focal to all of the merchants. That is where they focus on. Conversion is so important to get people that visit your website to actually make that transaction and have that transaction completed, as everybody is truly focused on. So we need to find that balance between risk management and payment management. Next slide, please. Fortunately, there are many techniques available today. So fraud is not like a yes or a no. There are multiple methods you can use in conjunction with each other. And you can make this distinction basically between authentication, which is verifying that you're dealing with the right customer. This is really your customer. It's not somebody else who's trying to impersonate your customer. And detection. So detection is making use of all the communication and connectivity options that you have with your customer to actually trying to find out if this is really the person what's the risk, or what is the probability that this is really your customer, or could it be a fraudster? And from a detection point of view, you're looking at things like device identity. So is this a device that the customer regularly interacts with, or is it maybe a new device? Looking at the device, is there malware installed? Is this device being rooted? So try to get a risk score on the device itself. Is that likely to be the proper device that the customer is using normally? Then behavioral patterns. So how is the customer behaving in terms of their regular shopping behavior? You can actually also use the way that the customer is actually entering information on the mobile that can discern him from somebody that's trying to impersonate, from a robot that is trying to log into a certain application, for instance. They have a different behavior than a real person. These kind of patterns you can analyze, and with artificial intelligence, machine learning, some really good things are possible in that space. Of course, you can check also device location. Is this person like myself? I do intersection from Amsterdam, that's probably okay. When I'm in Brussels, that's fine too. But if someone's suddenly showing up in some strange location, then that might raise a risk flag. That doesn't mean that this is a yes or a no. So this is kind of what we call probabilistic analysis. So you make a device score as well. Based on all these parameters that we have tested, we think it's like a 95% probability that this is the right person. And you can, based on your risk appetite, allow this transaction to go through unhampered, or you can ask for a second factor authentication. On the authentication side, of course, you have the user data verification credentials. So checking based on, is this, for instance, user ID password? Is this user ID password that the customer has? And are they right? So this is more deterministic. It's either yes or it's a no. You can also have out-of-band authentication, which is normally used for a kind of a step up. So, okay, I've seen a customer, it's been authenticated, I've done some detection analysis, I'm not 100% sure that this is actually the customer. So I want to have second factor authentication to check if this is the right person that is trying to get access to my services. And then you can have this out-of-band authentication. For instance, the most familiar one that we all know is your one-time password sent over SMS. But there's some more sophisticated techniques like the specific apps that sit on your phone that can communicate in a way similar to SMS, but it's considered more secure. Things like email and voice over IP are considered not secure anymore. And so this kind of out-of-band application is probably going to disappear over the next couple of years. Next slide, please. So here's then the question. So how do we optimize the balance between the risk and friction? So in this picture, on the lower left side, you see the security methods with the highest friction. Of course, there's token. So this is the separate hardware token that you got from your bank. I mean, we all have them. I have 3 of them lying on my desk here. They're extremely secure. Why? Because they cannot be tampered with, right? They're not connected in any way. You put your chip card in, they will generate a one-time passcode, and this is a higher level of security. At the same time, when I'm traveling, I don't have these things with me, and so they really just, for an M-commerce perspective, this is a high friction type of instrument. Would actually force me to take a different piece of hardware with me when I want to do a transaction. There are some other things like knowledge-based authentication, mobile app push are considered to be of a high friction type of instruments, because you have to do something, you have to wait for responses from the provider, and maybe when you are in a hurry, you don't want to wait for that. On the completely right side are instruments that are security methods that are kind of almost seamless or completely seamless. So checking device identity, checking your behavior, you don't even experience it as a customer. It just goes automatically. And of course, of your behavior biometrics is the same thing. So all things that machine learning AI can check for you in the background are really good additions to the user experience. And there are a number of other techniques that sit there in the middle. It's really about your level of assurance, your level of risk appetite that you want to take, that makes the decision which kind of instruments do you think are good or not. And they're not going to be used in isolation, they're going to be used together. So you have this kind of this layered approach to security to make it all work even better. It's it's a decision that that merchants have to make in terms of which security protocols do they want to implement. And that's becoming more complex every day. But with good results, still, even while e-commerce is still growing, fraud is increasing. Merchants seem to be able, what they tell us, to be able to control the fraud at least. So it's not getting out of hand. Okay, with the next slide, I'm going to hand over to Roney Castro to take over from here.
Thanks, Ron. Well, once again, just reinforcing the message. Welcome, everybody, and thanks for joining this this webinar. My name is Roney Castro. I'm with Ron and Jacob. We co-chair this work group at Mobey Forum. And so now, let's say in this part of the presentation, we'll be discussing some more details, let's say, from the research that we conducted with the participants. So as Ron mentioned, let's say there's different approaches to proper balance risk and friction and consumer authentication throughout the checkout experience. So when these different approaches, as Ron mentioned, depends a lot on the risk appetite of the bank and the merchant. So we asked for the participants of the survey how important are some risk management tools for securing e-commerce payments. So the possibilities were more a wide range of tools, such as real-time transaction monitoring for, let's say, risk-based authentication, customer risk screening during onboarding, multi-factor authentication, secure hardening the software on the mobile device, and consumer education. And from those options, from the results that we got, is that the participants really understand real-time transaction monitoring or risk-based authentication as the leading, as still the most important factor for monitoring, let's say, the risk of one specific transaction. It's important also to mention, for instance, multi-factor authentication is still seen as a very valid mechanism for a very important mechanism for fighting fraud, let's say, or to decrease the risk in some specific transactions. And also worth to mention that consumer education, although it's considered very important, it perhaps is a mechanism that banks have a lot of experience with. So so although important, it seems that from past experiences or positive or negative results, banks see this as, okay, it's important, but perhaps using more mechanisms that doesn't rely so much on the consumer, making it the authentication more seamless, but still very secure, as Ron mentioned, also important. So that's why the real-time transaction monitoring was from the response received, the mechanism considered, let's say, the most important from these entities. So can we move on to the next slide, please? So whenever applied risk-based authentication, one thing that we need to understand is how effective it was. So because when applied, risk-based authentication can actually outline the need of requiring the consumer to provide additional authentication mechanisms, to provide what we call a step-up authentication mechanism. So basically, whenever a transaction risk is deemed too high, so basically from the information collected from the consumer environment, device, actions, behavior, whenever processed, this information turns out to be insufficient to deem the consumer as the one whose identity is being claimed, that means that additional authentication mechanisms would be required. So from the respondents that participated in this survey, 31 out of 76 of these respondents indicated they have already implemented risk-based authentication. And when asked them, okay, but from the transactions where risk-based authentication was implemented, in what was the percentage of them where risk-based authentication proved to be sufficient given your risk criteria to indicate that no further authentication mechanisms will be necessary. So from the results that we got, 42% of these participants indicated that in 70% of the transactions or even more, risk-based authentication was sufficient for authenticating the cardholder or the consumer without further request of any additional authentication mechanisms. Can we move on to the next slide, please? So, but as I mentioned, sometimes risk-based authentication may indicate a risk that transaction requires further authentication. So in this case, a second authentication mechanism would be required. So in this case, when asked for which second authentication factor would be preferred, which technology would be then the selected one, or which approach to authentication would be indicated or preferred to apply the step-up authentication. So, well, in this case, half of the respondents voted for biometric authentication, because if we, again, and this is linked back to the topic that if you have to authenticate the consumer, how do you provide sufficient security, or how do you provide sufficient assurance on the identity of this consumer, causing the less friction as possible. So knowing the friction or the easiness or the user-friendly process, which is the biometric verification, half of the respondents indicated the biometric verification would be a preferred approach to applying strong customer authentication in case risk-based authentication requires further authentication mechanisms. So can we move on to the next slide? So, but then if we look then more through the glasses of PSD2 and if we look more for the glass of PSD2, the last version of the regulatory technical specification standards, sorry, require that apply the exemption to some type of transactions. So from the context of PSD2, whenever you are initiating payment transactions or in specific scenarios where you are requesting accessing consumer information, you may be required to apply strong customer authentication, which is the composition of 2 or more authentication factors. So, but then, well, given that there's an understanding that there must be some sort of user friendliness in this process, where applying always a strong customer authentication would increase a lot of the friction in the consumer journey. Some exemptions to the application of strong customer authentication were implemented in the RTS. So for that sense, for e-commerce payments, it was established a value of 30 euros, which we requested to the participants in this, the opinion of the participants on this questionnaire to share their feedbacks on that. And more than 70% of these respondents actually believe that the value set for of 30 euros is too low, but still, let's say we have quite a lot of different opinions on that. So for instance, if I quote here the 2 respondents that the threshold to apply strong customer authentication for remote card payments should be 0. So that means that pretty much every single transaction should be in every single transaction should be applied this strong customer authentication. But then if technology is properly implemented and the focus is on a streamlined user experience, then the threshold becomes mute, which is actually quite a reasonable comment, because, well, but that's actually the goal, to have like a very nice authentication mechanism that causes the minimal friction as possible in the consumer journey, still, let's say, granting a lot of assurance on his identity verification, while, let's say, still causing the less impact as possible in his journey. So, for instance, the other comment is that it should be up to the industry and merchants and banks themselves if they would like to set a limit or not, and if so, where this limit should be exactly. So, one of the comments actually said that, well, there shouldn't be a threshold, so pretty much every single transaction should be subject to strong customer authentication. On the other hand, other opinions see that there must be a threshold from which below transaction value should be exempted from application of strong customer authentication. Nevertheless, this value should not be regulated, should be actually balanced by the market somehow as it is today. So the opinions there, although so basically, but although the respondents actually agree that the threshold set by the regulator is fairly low, there are some quite different opinions on how to change it actually. Ron, do you want to add something?
No, thanks, Roney. It's
okay.
okay. Yeah.
So moving on to the next slide. So, but we also saw it's really important to have a good understanding of how these thresholds and how these different consumer experiences vary, because if we, especially if we look through the domain of PSD2 and how PSD2 will actually reframe the payment landscape in Europe more specifically, because indeed, if we look at the payment market, like from a couple of years ago, we were limited from a couple of checkout solutions. So we pretty much have card payments, digital wallets, for instance, PayPal, for instance. But now, let's say the payment landscape is getting more complex by the day. So if we take a look on what's happening currently in PSD2 and how these respondents actually, which was the feedback provided by these respondents for the survey when asked which kind of payment method they are planning to support in the coming 2 years, most of them are actually looking forward to the new payment models that will be introduced through PSD2. So let's say it becomes quite clear that these requirements for strong customer authentication and the balance for between friction and consumer journey, while obviously providing enough assurance and security, it's really important. So for that sense, it's more critical than ever, let's say, to start thinking about these mechanisms and streamline the customer experience to provide a more consistent user journey, obviously without having the risks of eventual chargebacks and disputes and frauds. Okay, on this comment before we move on, Ron, do you want to add something here in this point?
Yeah, Roney, what you clearly see in merchants, if you are a merchant, and you have, for instance, you sell consumer goods or something that you want to reach a broad audience as you can, that you operate in different markets, then what you really want is to cover, like say, at least 90% of the payment instruments for such a market, and that's what the people tell us. And the more and more payment instruments coming to the market, well, all the time, and with the new models and PSD2 adding to that. So the complexity is really enormous, and there are two aspects of it. First, the complexity of payment space can introduce, let's say, new entry points for fraudsters to, because people are not so familiar with these new payment instruments as they used to with cards and everything else. So that's one thing that the new fraud management solutions have to take care of. So they may be designed for card-based environments, but they need to take care of the other payment instruments as well. And the other thing is, the user experience, how to, neatly keep this frictionless and keep it, let's say, consistent across all the different payment methods and all your different channels. So many merchants are moving to what we call an omni-channel experience. So you want to be able to transact online, you want to be able to transact over the mobile, you want to be able to transact over social media, you want to be able to transact in the store, and maybe in the store you want to be able to do an online transaction. So all these different possibilities to interact with a merchant the merchant want to offer the same payment methods of all these channels. That's what we hear from merchants. Combine that with a real-time fraud analysis that we've been covering this presentation, and looking at a really interesting and fastly developing space, and so still so much room for providers to innovate there. I think it's a truly dynamic, interesting space to look at. Over to you.
Great. So moving on to next slide then. So again, still leveraging on this topic of the points of integration and the changing in the landscape of payments in the EU. Well, that would mean at the end of the day that payment initiation services will be able to actually connect to banks and connect to consumer accounts to initiate payments. So although this change in the landscape may bring a new let's say new payment experiences and new payment channels that were not previously covered, and let's say with a big potential interest for merchants, it's important. It doesn't come without any background. Let's say there's still some skepticism and some concerns about the additional risks that it may impose or may bring due to open access. So if we take a look on let's say, well, although I think there's always the concern about how much authentication you're applying and what are the risks involved in any operations, especially financial operations, that needs to be taken into account by all the players in the field. So when requests about what will be what are the concerns about the additional risks, so nearly half of the respondents have some concerns about the additional risk that open access may impose. So if you take a look at the feedback received, for instance, aggregator-style companies lack incentive to secure their infrastructure because they don't currently have liability for losses. And the next one is, for instance, this is a data security nightmare for the bank. So just taking these two initial sentences here to say that indeed, as outlined currently in the RTS, let's say whenever a strong customer authentication happens, it's well on the responsibility of the bank. So the fraud, let's say, or the liability for any kind of problem in these scenarios would actually fall under the bank responsibility. So there's no, if we compare this with the dispute mechanisms currently in place for the card payments ecosystem and, let's say, digital wallet mechanisms, so you can see that there's like some tools to actually assign and establish clear responsibility for frauds. But these mechanisms is still it's fairly simple in the PSD2 domain, where they just shift to the bank in case a strong customer authentication was applied. So for that kind of puts the banks in a very tight spot, because although they are also responsible for customer authentication, proper customer identity, there's also and make it securely. There's also the requirement for providing, let's say, a better authentication mechanism and streamlining the authentication processes in order to make this less free, to provide, let's say, good security in an excellent user journey by removing, let's say, all the friction points as possible. So that's why it may be seen as this may actually be what we can interpret from the results obtained, where half of the respondents actually indicated to have some concerns about the additional risks to open access. So just before we move on to the next slide, Ron, any additional comments here?
No, thanks, Ronnie. So fine, yeah.
Okay, so moving on to the next slide. So from this research, well, there are some key takeaways that we can take that we can conclude from the data that we received. So it's clear that other players in the market are especially PSPs and merchants, they are looking forward to find solutions to balance, let's say, fraud prevention, fraud detection, and provide more streamlined user experience. Because At the end of the day, if you are doing a checkout, well, we're all consumers here also. So although we come from the industry and we are somehow the parties responsible for defining consumer authentication in our roles and or helping the industry actually set the standards for consumer authentication, we are also consumers at the end of the day. So we know also how important it is to also to have a good user experience in ourselves. So that's why it's but we also want this as consumers without actually the possibility of even being subject or being exposed to frauds. So that's not one thing that we want as a consumer. We also this is also reflected in pretty much all the players in the market to look for solutions that balance both fraud prevention and removal of the friction in the payment experience. So for that, well, strong customer authentication is currently being the most defensive measure implemented by financial institutions and merchants. But indeed, let's say, although strong customer authentication is a good mechanism with proven results for reducing fraud, it can introduce a lot of friction in the checkout process and the entire consumer journey. So that's why even some merchant segments, they actually avoid using this or looking for different mechanisms to actually understand when this needs to be applied. So when there's let's say in scenarios where there is a possibility of selecting the application or exemption of strong customer authentication, but when we go to but for instance, PSD2 actually established some rules for that. So when we actually take a look on the mechanisms which are being currently used, we see that risk-based authentication is currently one of the tools that are providing, let's say, currently very used and very seen by the market as a very important tool to understand when the application of strong customer authentication is needed. So basically enabling a good balance between providing a smooth user experience, because you don't actually request the user to go to provide a step-up authentication, to be subject to step-up authentication, and also balancing your risk. So basically you can pretty much understand the risk you're subject to, understand the risk of some specific context, and then see if you can take the risk with the information that you have, or if you require further authentication mechanisms. So also when you require additional authentication mechanism, it's not a given that you just want to say, okay, it's fine, so this consumer will have to bear with a more friction in his checkout process. No, you also want to avoid this from happening. So how do you select a good second authentication mechanism? Obviously, you take into account the ones that provide less friction during the checkout process, and that's why also the adoption of biometrics as a second authentication factor very likely will continue to grow as it offers, let's say, quite good convenience between the security it provides and the user convenience. Because while indeed, let's say, presenting your fingerprint to your phone, or scanning your iris, or scanning your face, it's somehow more friendly than actually have to type like a 8 or 10-digit password in your phone, or waiting for an SMS that may take some time to be received. So these were the most important takeaways that we had from this research. I'm not sure if Ron, if you want to add something on this.
I think only that it's a really interesting space to look at, and so much development here. It's not only about fraud. It's really about, about the core business of the customer almost. So we talk about customer experience, but basically what we talk about is revenue, right? This is where, if you don't get this right, and too much friction in the process, people will go somewhere else. If you prompt us wrong, set wrong in the other way, it means that your fraud will get out of hand. So to get this optimal, is a challenge. That's also where a lot of innovation is happening in the payment world. So yeah, looking forward to follow where we're going from here. Thanks.
Thank you, Roney. Thank you, Ron. We have some questions from the audience, but before we go there, I'd just like to remind you that this webinar will be on our website, www.mobeyforum.org. from tomorrow onwards, as will the report, and the report has been sent already beforehand to our members. The first question goes to Ron. So we do know that online payment fraud is increasing significantly worthwhile. Why does then reducing friction continue to be the main priority for the merchants?
Well, merchants, of course, recognize need for security, but they also need to, introduce fraud prevention security measures into the payment process. So it can really complicate the user journey, and we discussed that, I think, also in the webinar. So you've all experienced this. So it's some frustration, and can lead to shopping cart abandonment and lost sales eventually, particularly for the m-commerce. And many merchants take a mobile-first approach right now. So for m-commerce, for them is the main channel. It's extremely important to get this right. So it's important to recognize and respond to the challenges of that merchants are facing. And what we try to do in this report is really what is the best way to balance a secure application with optimum user experience. And it's not an either or. There are possibilities, there are solutions in the market that create a win-win situation where you can combine a secure form of authentication with superior user experience. For instance, what's offered by biometrics or offered by risk-based authentication, as was covered by Roney. So it's going to be easier for the customer and also more secure. And that looks like it's not a paradox. It's something that is going to be reality, I think. Thank you.
All right, thank you. Thank you. Just to remind you that if you have any questions, then please enter them into the chat function. But we already have the second question, which actually goes to Roney. Do you think that there is a silver bullet to apply SQA without compromising the user experience?
Sorry, I actually didn't. I think there's some problem in the audio. I didn't hear the message.
Okay. So, do you think that there is a kind of a silver bullet to apply secure customer authentication without compromising the user experience?
Well, not really. Well, that's actually what the entire market is looking for at this moment, I can say. So, well, there's some authentication technologies. So pretty much all the authentication technologies, like biometrics, for instance, they will be leveraged, let's say, because at this moment is the technology that is providing the best balance between security and experience. But definitely every single technology has its pros and cons depending on the channel that you are applying it, and so at this moment there's no single solution that can address, let's say, the authentication requirements and balancing extreme security with extremely good user experience across every single channel that you can authenticate a consumer. So because every single one of them has its pros and cons, and that's why technology will keep evolving. So that's why it's better to not rely only on a single line of defense. So, and also that's also one of the reasons why financial institutions and merchants should adopt this layered approach, as we discussed, using various different approaches depending on the technologies, on the channels of authentication, like we identified in the report. So this is a very dynamic market. So as I mentioned before, biometrics is currently technology that is growing in its adoption, because it's the one balancing well this challenge in the e-commerce domain. But definitely the market will keep evolving in such a way that, well, the search for new authentication mechanisms. So in 2-3 years from now, if we are revisiting this webinar, we may be experience different authentication mechanisms, because this is still something that the market is continuously looking for.
Okay, thank you so much. I see that we're actually running out of time. So if you have still more questions, please reach us as the Mobey team, and we can then direct further questions to the chairs. At this point, I would really like to thank the audience. Thank you for being with us. Thank you, Ron and Roney, and thank you all of the expert group for an excellent survey. Have a nice day and a nice evening.